Hey guys, it's Nick, and in this video I want to talk about ExxonMobil and oil stocks in general. Is now the time to buy them, and what headwinds they have going forward? Are they going to go lower from here, or is this the bottom? Royal Dutch Shell cut its dividend early in the year, but 6 months later they're actually raising the dividend again by 4% to 16.65 cents for the quarter. And the CEO promised further increases in the future. So that's definitely a positive for them. What about Exxon? Exxon said that they're going to keep their dividend flat for the first time since 1982. They're not raising it, but at least they're keeping it flat. Do they have the risk of cutting it in the future? Yeah, possibly. But I think a lot of the bad news of the oil industry is already built in. And here in another headline, they're talking about they're going to cut 14,000 jobs or 15% of their staff to defend their dividend, and they report earnings tomorrow on Friday. So I wouldn't be surprised if they do kind of what they call a kitchen sink quarter, where they throw everything but the kitchen sink into their numbers to get all the bad things out in one shot. So they announce write-downs of assets, they announce job cuts, all kinds of things to put all the bad things in one quarter and hope that the worst is behind them from here. And let me just say, full disclosure, I own oil stocks, so you can assume that everything I say here is biased because I want my stocks to go up. So take everything I say with a grain of salt, and of course, make your own conclusions and do your own research. ExxonMobil, some years ago, around 2013, was the most valuable stock in the world by market cap. Now, even Zoom is more valuable than ExxonMobil. So here you see Zoom has surpassed the market cap of Exxon, 141 billion versus 136 billion. And Zoom is trading at a price to sales ratio of 102, while Exxon is trading at 0.64. So you're paying 100 times Zoom's actual revenue, not earnings, revenue, whereas you're only paying 0.6 times Exxon's revenue. And here's a look at Exxon's stock chart. Back in 2014, it was above $100. And in 2009, it was $95. And now here we are in the 30s. And you always hear the mantra for the stock market or anything: buy low, sell high. But it's easy to say when you see a stock chart of many years of data, but when you're actually living in the part where you're at the low, most people do not buy because they are afraid or because they bought it higher and they're sitting on big losses, so they don't want to keep buying into something that's going lower. The oil industry and oil prices are cyclical, of course, and if you look at this historical price graph of crude oil, you see in the early 70s it was low, then the Arab oil embargo made it rise up. You had the first Gulf War, it spiked and then went really low as like in the teens in the late 90s, and then it spiked again to, what is it, like 130, 140, something like that. Now here we are back around $40 or so. I don't know about you, but I would rather be buying it when it's at its low levels than when it's at its high levels. And so what I want to impart to you is that you should be looking to buy things when everybody is screaming about how horrible it is and it's never going to come back and it's doomed and all that stuff, because that's when it's its cheapest and that's when nobody wants it and that's when it has the best valuation and the best dividends. I mean, just the XLE ETF, the oil ETF, has a dividend of about 7.6 or something like that. And ExxonMobil's dividend is above 10%. So my point is, if you're ever thinking of buying oil stocks, now is the time to look at them, not up here at 140 when everybody is chasing it and saying that oil is going to infinity and beyond forever. And if you don't believe me, you could just look back at some of the articles that they were talking about back during these times. Nobody was saying, hey, this is the top, we're going to be at $30 in 5-6 years from now. They're saying, hey, this is the beginning. Oil's going to go up to $200-$300. We're going to have to ration it. We're going to have all kinds of problems and shortages and that kind of thing. So always take the other side of what the majority people are saying. And if you don't believe me, look at some articles from like 2008 when they're talking about Barron's itself is promoting this guy who's saying $300 a barrel oil. This guy, Charles Maxwell, who has been in the energy business since 1957 at Mobil and all this stuff. He is a credible person saying that oil's going to $300 a barrel. And so here we are where people are questioning whether Exxon is going to survive or whether Exxon's going to be able to keep their dividends going without cutting it or something like that. But just a few years ago at the high, every politician was talking about how they need to do a special tax for Exxon Mobil and other oil companies because they're making way too many profits. And so that was the headline, windfall profits, they were calling it. In other words, if you make too much money, you gotta be taxed extra because you're just making so much money. So Wall Street Journal is talking about it. All these politicians that were running for president, Hillary Clinton and Obama, they were talking about it. We will pay for it by imposing a windfall profits tax on big oil companies. They sure can afford it, said Hillary Clinton. So, like I said, these things usually get out of whack in one direction or the other. So when oil prices is high, everybody thinks it's going to go on forever. And when oil prices are low, they think it's all going to zero, as if we're going to stop using oil. So there are two arguments against oil right now. One is that we're moving away from oil and that renewables are going to take its place. And the other one is that demand has fallen because of the shutdown. So the ongoing economic activity is reduced, and people going forward are going to be driving less because they're working from home more and not going into offices, and offices don't need to keep the lights on and heat their buildings and all of that. So that demand going forward is going to fall significantly and therefore keep oil prices low or lower in the future. Let's start with the argument that oil is going to be replaced by renewables very soon. That's not happening. And to prove that, think about if Zoom went away today, nothing would happen to your life. But if oil went away today, you wouldn't have electricity, you wouldn't have heat, you wouldn't have cars to drive in, any of that stuff. We would be in the Stone Age tomorrow. Here's a chart of U.S. energy consumption for 2019, and we used 100 quads approximately. Each quad is a quadrillion BTUs, which is the equivalent of 185 million barrels of crude oil. So since this number is 100, let's just say it's like saying it's 100%. So if you look at all the inputs that we use, solar is like 1%. Hydro is like 2.5%. Wind is 2.7%. So those three together, those so-called renewables, are what? 6% of the total, whereas the rest is natural gas, 32%, coal, biomass, petroleum. And for people that think, well, yeah, we're moving quickly away from all of that fossil fuels, take a look. From 2015 to 2019, the fossil fuels in our mix was 81%, 80, 80, 80, 80. So it really hasn't changed much at all. And the percent change in each of these categories over that 5-year period, oil plus 0.3%, natural gas plus 3%. The only thing that went down a lot is coal, which is almost 5%. But look at the wind, up 0.8%, big deal. Hydro, flat, 0%. Solar, 0.5%. So for the people that say that in 5 years or in 10 years we're going to be away from oil when we're using 80% of it right now, and these so-called renewables are tiny and even growing at tiny percentages of our use. That is so far from reality that it's actually shocking to see that people actually believe that. So the other argument is that the shutdown is going to stop people from flying and driving and going to work, and businesses won't need to heat and electrify their buildings, so demand is going to fall off a cliff and stay there for a long time. So that's definitely possible. Let's look at the actual numbers. Before the shutdown, we were producing and using about 100 million barrels per day. And at the height of the shutdown, that dropped to about 85 million barrels. But the Energy Information Administration, EIA, is already forecasting that in 2021, it's going to be right back around the same levels and growing from there. So here you see 2020, they say that the demand dropped by 8.6%, but their forecast for 2021 is to be up by 6.3%. And so look at the demand here. I mean, it's been going up, although driving miles, they say, have dropped in the last few years, but for 2020, the drop is like 8.5%, from about 100 million barrels per day to like 91.7 million barrels per day. It's slated to pick up after that, assuming that the shutdown stop and people start flying again and people start driving again. That's definitely a question mark. It's not going to happen overnight. Some people are going to be more comfortable flying and driving around sooner than others, but the trend is definitely that oil consumption will grow in the future. And the reason I think that it will come back is because when 9/11 happened in September 2001, all the airlines shut down for a while. People were afraid to fly. People were working from home. And so a lot of people thought that that was the end of the demand for oil, that it was going to decrease significantly. And if you look, the increase in demand for oil for 2001 was 0.97, so like 1% increase, which is not that different from the year before in 2000, which was 1.22. The only time we actually saw decreases in demand were during the Great Recession, 2008, 2009, and that picked up shortly afterwards. So the idea that people are going to stop flying forever or they're going to work from home forever, that lasts for a little while people are still afraid, but eventually that changes and we go back to the normal kind of projection of where we were before. Now, the idea that everybody's going to work from home forever from now on and you can live anywhere you want, and companies are embracing it, that they're going to go 100% work from home model, well, what they really believe, and just 1 year ago, you see these articles, May 2019, why are companies ending remote work? And there was a lot of articles like this, Bank of New York and Yahoo and IBM and Aetna and Best Buy, that they want their work from home people to return to the office for a number of reasons, mostly for productivity. Supervisors can't watch over them, and also that they find that they're less productive when they're not in teams that they can talk to and bounce ideas off of and collaborate with. It's a lot harder to do when you're at home. So that is the general feel and idea of companies about working from home before the shutdown. So I think they are going to trend back to that once the coast is clear and everybody's back to going around and states and countries aren't shut down anymore. We're going to go back to that. So the idea that people are going to be working from home forever and all these office buildings are going to be sitting empty and all that stuff, I don't believe it. And once we get back to normal, companies are going to want people to come back to the offices generally. There may be a larger percentage of people working from home in the future, permanently, but it's not going to be like 99% or anything close to it. That said, I don't know if oil is going to go lower in the near term. You still have countries in Europe now doing new shutdowns like Germany, Italy, and Spain. And so that could definitely affect demand for oil. But long term, I would rather be buying oil down here than up here. And so this is the XLE, which is the oil ETF, and it's yielding about 7.72%, and it has all the big oil companies in it. So if you agree with my analysis and you are looking for some good paying dividend stocks that have the potential to appreciate going forward when things turn around, and you know that oil is not going away anytime soon, then you might want to consider the XLE ETF if you don't want to pick individual stocks. And the XLE has some of the biggest oil companies out there, so it's a good safe bet to just buy it, collect the dividend, and wait for things to turn around. So wait till it gets back up here where people are saying oil's going to infinity again, and start selling there. So I hope you like this video on oil. If you agree with me, leave a comment below. If you don't agree with me, leave a comment below and let me know why you think I'm wrong. And as always, if you haven't subscribed, please subscribe now. Thanks for watching.